Back to another amazing video here at Exclusive. Today we are going to be talking about stock splits. Before we jump right into it, let me just first mention here that I'm not a financial advisor and this is not financial advice. However, whenever a stock splits, this is a tremendous opportunity for people to take advantage of a stock at a nice discount because it's splitting. So first things first, let's actually answer the question, what a stock split is and how it works. The link for this description that I'll be using here from Investopedia, I will leave that link in the description. All right, so a stock split is a corporate action in which a company issues additional shares to shareholders, increasing the total by the specified ratio based on shares they held previously. So a stock split happens when a company increases the number of its shares and boosts the stock's liquidity. Although the number of shares outstanding increases by a specific multiple, the total dollar value of all shares outstanding remains the same because a split does not fundamentally change the company's value. The most common split ratios are 2-for-1 or 3-for-1, sometimes noted as 2:1 or 3:1. This means that every share held before the split, each stockholder will have 2 or 3 shares respectively. So if you had one share of, let's say, Apple, and it was a 3-for-1 split, then that one share would turn into 3 shares. So it's actually pretty cool. Now, some key takeaways here is that a stock split is when a company increases the number of its outstanding shares to boost the stock's liquidity. Although the number of shares outstanding increases, there is no change in the company's total market capitalization, as the price of each share will split as well. The most common split, which we talked about, can be a 2-for-1 or 3-for-1, but those aren't the only types. We've actually had quite a few stock split in 2024 and some actually pretty attractive ones coming up for the rest of 2024. One of them we're actually going to talk about towards the end of the video that was just announced today, May 22nd, 2024. So please make sure to stay to the end so we can cover that for you. A company likes to perform a stock split to intentionally lower the price of the single share, making the company's stock more affordable without losing value. Reverse stock splits are the opposite transaction in which a company lowers and instead of increasing the number of shares outstanding, raising the share price accordingly. Now for a quick bit, we're going to talk about how a stock split works. A stock split is a corporate action in which a company issues additional shares to shareholders, increasing the total value by a specified ratio based on the shares they held previously. Companies often choose to split their stock to lower its trading price to a more comfortable range for most investors to increase their liquidity of trading in its shares. Most investors are more comfortable purchasing, say, 100 shares of a $10 stock as opposed to 1 share of a $1,000 stock. So when the share price has risen substantially, many public companies end up declaring stock split to reduce it. Although the number of shares outstanding increase in a stock split, the total dollar value of the shares remain the same compared with pre-split amounts because the stock split does not make the company more valuable. A company's board of directors can choose to split the stock from any ratio. For example, a stock split may be 2-for-1, 3-for-1, 5-for-1, 10-for-1, 100-for-1, or etc. A 3-for-1 split means that for every 1 share held by an investor, there will now be 3. In other words, the number of outstanding shares in the market will triple for that example. So, once again, I will leave the link for this article in the description. It will go ahead and talk more about, for example, it's going to talk about like special considerations, advantages of stock splits, disadvantages of stock splits, examples, stock splits, reverse stock splits, all of those different details will be found here in this article linked in the description. Now let's talk about one that was announced today, which kind of blew my mind. It was one that I was waiting for a while. NVIDIA has announced a stock split post Q1 earnings beat. And this was announced today. And this is actually one of my the best performing security that I have in my Roth account, which is NVIDIA, up over, like, I think it's like 900%. I brought it when it last split, which when it split was about, like, I think I want to say it was anywhere between $200 and $300. Now, of course, if you take a look at the price of NVIDIA, it's around $900. So that tells you the amount of growth from a dollar standpoint as well as a percentage. So let's go ahead and dive into this article. NVIDIA, which is ticker symbol NVDA, made a lot of headlines while posting the fiscal 2025 first quarter results. The tech giant posted adjusted earnings per share of $6.12 versus the street's $5.65 estimate. Revenue of $26.04 billion was better than the Bloomberg consensus at $24.69 billion and up 262% from a year ago. And outstanding, amazing. Data center revenues rose 427% from a year ago to $22.6 billion, topping expectations of $21.13 billion. NVIDIA also announced, and this is what I was telling you about earlier, a 10-for-1 stock split, which will occur after the close of market on June 7th. The company is also raising the dividends from 4 cents to 10 cents, which the company says is equivalent to 1 cent per share on a post-split basis. For the second quarter, NVIDIA expects to report revenue of $28 billion plus or minus 2% compared to $26.6 billion estimated. It's outstanding. This company is profitable. If you don't know about NVIDIA, I guess you can say they specialize in like graphics cards and chips. But they actually do so much more. They have an impact on AI, which is artificial intelligence. They have an impact in reference to like ChatGPT and a lot of the software that's being pushed out, as well as the semiconductor part of it as well. So they kind of have their hands in a lot of different things. And this is why, as I mentioned, I've been investing in NVIDIA for quite a couple of years now. Keep in mind, this is not advising you to purchase NVIDIA. It's not a recommendation either. I'm just letting you know that this was something that was announced today, them having a stock split. And if we take a look at NVIDIA, which we have right here. All right, so we see at this time, it's, look at this growth, it's crazy. Right now it's at $949.50, right? If we look at price, okay. So back here in, let's just say, May of 1999, it's $3.28. 5 years ago, back in 2020, it was at about $41.85. Keep in mind, there have been a few splits that have happened over the last, I want to say, 5 years maybe. A year ago this time, it was $300.07 back in May of 2023. And right now it's $949. So remember I told you I had this during the last split, which was probably around, I want to say probably around early 2023. I told you I got I think I got mine's probably around 200. I want to say, so probably I would have gotten mine's probably around February of last year. So as you can see, you do the math. If I got it at 200, it's $949. That's about a $700 plus growth. And also keep in mind that once that one share splits, I'm not going to have 10 shares of NVIDIA. So if you're not able to purchase in at NVIDIA at this price, assuming that, let's just call it in June, let's just say that NVIDIA goes to 1,000. When that stock splits, if it splits exactly at $1,000, just for simplicity, math purposes, that means that each share will be $100. It's a lot easier to buy in at $100 versus $1,000. And if the growth is anything at, like it's been the last couple of years, as you can see, just looking from the 5-year standpoint, how fast it grows. Keep in mind, for just about everything nowadays, you need chips, you need, all of these different things to help processes all the computing. So I think it's fair to say, at least from my perception, that NVIDIA is going to be here for some time. I don't think this is an industry that's going to go anytime soon. So I did want to bring that to your attention. As I mentioned, it is announced for, let me go back, I think it says June 7th, 10-for-1 split. So put that on your calendars, and if it is something you're interested in, definitely take advantage of it. As it shows here, the company is profitable. They're even increasing their dividends. So once again, June 7th, 10-for-1 stock split for NVIDIA. If you all did find this video helpful, please make sure to like, share, and subscribe. And I'll catch you all in the next one, folks. Peace.